Hello everybody, welcome back to the Invest in Wealth channel. Today's video we're going to be checking out my top 3 Canadian ETFs that I believe every dividend growth investor should own in their portfolio. We're going to be taking a look at one ETF that's solely based on the Canadian market, one on solely the US market, and then one that's global, so it'll have all the markets just in the one fund there. So without further ado, let's hop right into the first ETF. All right, first ETF we're going to be looking at is VDY. This is Vanguard's Canadian High Dividend Yield Index ETF. So this is the ETF that's based solely on the Canadian market. It has a bunch of high dividend Canadian stocks in it. So this ETF pays out a monthly distribution, and they have the high yield of 4.73%. Their management fee is 0.2, so it is fairly low. Market price right now is at $41.96. This is a pretty big fund with 2.1 billion assets under management there. Taking a look at the 5-year chart, we do have that great growth there as well. So you kind of with this fund you do get that nice high yield, and also you still get the growth as well there. As we're taking a look at the holdings, as you can see here, it is very heavy on the banks and the oil and gas and pipeline sector, because normally here in Canada those are the companies that do pay out the highest yields there. So these are the top 10 holdings. We got RBC, TD, Enbridge, BMO, Canadian Natural Resources, BNS, BCE, TC Energy, Suncor, and CIBC there. So this is their top 10 holdings. These are absolute massive companies here in Canada, and they do pay out fairly big dividends. So that's the top 10 holdings there. We could take a look at all their holdings. You're kind of seeing the same thing, mainly the oil and gas industry, as well as the big banks and insurance here in Canada. Like I said, those do pay out the highest yields. So this ETF is absolutely perfect for investors looking for that nice monthly income, as well as holding long term for that capital growth. This is the perfect fund for people seeking those qualities in an ETF. This is one of my favorite charts to look at here. So this will be the growth of $10,000 in VDY if you invested it 5 years ago. So starting with $10,000, in today's value here, it would be worth about $15,600. So that's about a 15.5% return that you'd make there in 5 years. And I don't believe that this accounts for the dividend as well. So this would be even larger with the dividends reinvested. If you were to invest $10,000 back, I guess this would be 11 years ago, starting with $10,000. Today's dollars, that would be roughly $25,000 there. So you'd that's about 150% return. So this just shows the kind of the power of the companies we have here in Canada. These are fantastic companies. This is, like I said, the perfect ETF for someone looking for the monthly income, as well as the long-term capital gains, as we can see here. Next ETF we're going to look at here is another one of Vanguard's funds. So this is VFV. This is Vanguard's S&P 500 Index ETF. So this is the top 500 largest companies in the United States. So this fund is in Canadian dollars. So this is perfect for a Canadian investor looking to get that exposure in the US market. Taking a look at their extremely small management fee there of 0.08%. This ETF does pay a dividend of 1.28%, and they distribute that quarterly. This is a huge fund, $8.5 billion assets under management. So even though this fund does have a smaller yield, you do sacrifice that yield, but you do receive this more growth for sure. As an investor, that's the type of chart that you want to see, really. Well, let's get a better understanding of how much growth $10,000 would have got you if you invested in this fund 5 years ago here. So starting off 5 years ago with 10,000, in today's value, that would be worth about $18,000. So you would be up 80% on your investment there. And then looking back since this fund started back here in 2012, so 11 years ago, you invested 10,000, you'd be sitting at approximately 50 grand. So you would have 5x your money right there. That's the power of the top 500 companies in the US. If you're looking for US exposure, look no farther. VFV got you covered there. Absolutely. As we look at the sector breakdown, this just shows how diverse this fund really is. You're getting exposure to so many different sectors here. This is absolutely fantastic as an investor. We want to be diversified. We want to get exposure to multiple sectors here. And this is exactly what this fund does. Just take a look at how spread out this is. We are heavy on the information technology, so tech stocks. We're talking like Apple, Microsoft, Google, which is great for the growth there. Go healthcare, financials. Just so this ETF is just so diverse. This is really what we want when we're investing in a US ETF, especially. Just so diverse across many sectors. Diving into this fund's top 10 holdings here. We'll only focus on the top 10. We won't go through all 500 here because we'd be here for a while. But taking a look at the top 10, we have coming in at number 1, we got Apple. So Apple does make up 7.65% of this fund. These are all just quality companies here. We have second, we got Microsoft, Amazon, Nvidia, Google, Tesla, Meta, Google again, Berkshire Hathaway, United Health Group. Just so diversified. I'll say it again. This fund is absolutely fantastic. I do believe every investor should almost own this fund. It provides a little bit of a dividend, so you're getting that income. Plus, you get fantastic growth. All right, taking a look at the last fund here. This is a very interesting fund. This is XEQT. This is iShares Core Equity ETF portfolio. Today it's trading at 26.77 Canadian. So this fund is basically a fund that owns different ETFs, and this will diversify you across basically the globe. In simple terms, you have exposure to US, you have exposure to Canadian, you have exposure to other markets across the world here. This fund does pay about a 3% dividend yield, so that is pretty good. They pay this out quarterly. So this fund, you do get that growth, and you as well get a nice yield of 3%. Moving along to the exposure you get from this fund. This is extremely interesting. For those of you not just wanting to invest here in North America, in this fund you do get exposure to other countries as well. So about 45% of this fund is based from US companies, 24% from Canadian companies, 6% from Japan, 4% from the UK, 3% France, 2.5% Switzerland, Australia, Germany, China, Netherlands. and then about 10% other countries there. So this is an absolute perfect fund for investors looking to diversify their portfolio into different global markets. This is where you want to be at here. They own four other ETFs in this portfolio. So you got the U.S. stock market. This would be the Canadian fund here. This is an emerging market fund at the bottom there. And this is just another international fund. So that what actually makes up XEQT, all these funds put together. This is a very interesting fund. Small MER here of 0.2. So let's take a look at the growth of 10,000 here. We'll go back 3 years. So if you invested 10 grand in XEQT 3 years ago, today you'd be sitting at 13,450. So you'd be up about 34% there. Like I said, just a fantastic way to gain exposure across many different regions. They're constantly rebalancing as needed in order to maintain asset class target weights. Low MER, which I'm surprised with the low MER here. You're getting so much diversification. This is perfect for us investors here in Canada and the North American region as well. To get this exposure, and it's still in the Canadian dollars, it is absolutely fantastic. So that is XEQT. I've really had my eye on this for a while. I'm looking to start to build a position here. So feel free to do your own research. Just to recap, we did go over one Canadian ETF, that was VDY. We went through the one American ETF, which was VFV, and then we went to the one kind of the all-in-one ETF for the global exposure, which is XEQT. All right, that basically sums it up here. Hope you guys learned something. Again, do your own research. This is just my personal picks here. Thank you guys so much for watching, and I'll see you in the next video. Bye.